All right, how's it going, everybody? Today, I have done past week. I've done analysis on orange juice, live cattle, future trading, gold. I've stepped away from trading oil at the moment, although I believe that oil shall see over 50. Until then, I'm not really going to play the speculation trading. So today, I'm going to do an analysis on copper. Okay, so this is not for day trading. This is more so for swing trading. This is a swing set, right? Because the levels that we're at right now are very attractive, even if you're holding as an investment. Okay, reason being is because what we're seeing right now is copper has tested low, 7-year low. Although I don't believe a 7-year low is usually a bottom, I do believe around that time span, it tends to be a temporary bottom, okay? So I'm going to move over to the chart, okay, where I'm going to share with you guys. So this is copper, right? We're looking at a large time frame right here. This is the big picture, right? So when you want to look at the big picture, you're going to hit the weekly. You're going to see years on the bottom, right? So you got 2006, 7, 8. In between is the numbers, right? Currently, right now, we're sitting at $2.05. And that is a level that I'm attracted to. Now, and I'll explain why, right? So this chart that we see right here in front of us is a long period of time. This is price fluctuation year to year since 2004. And I want you guys to know before I go on any further, because majority of you viewing this probably don't have any idea about copper. You've heard copper, you know that it's in pipes, you know that it's used for buildings, houses, construction, and so forth, right? It's hard to believe that at one point, right, in time, around 2002, 2003, copper was as low as 74 cents and as low as 50 cents at one point, okay? The all-time high that copper has ever seen was around $4.50, right? That was the peak, and that was around 2011, right? Now, people are very bearish on copper, okay? But, I mean, is copper really that bearish? Or are we just correcting right now? That's how you got to look at it, right? Are we just correcting, or are we actually going to go, you got some analysts saying that we're going to go right back down to the 50-cent area, right? Well, considering that we came from, as low as 50 cents all the way to $4.50 in 2011, years following the financial crisis, financial crash, I don't think that we're doing all that bad. I mean, if the low around 2001 was 50 cents and we're still at $2.05, even after the '08 crash and even after China crash, which we just recently saw a couple of months ago, I think at 205, we're holding up pretty well, right? So there's two levels that I'm looking for, okay? And this is a level right here that I don't want to see break, which is around 197. Right? I don't want to see 197 broken. We can round it off to 195. I don't want to see 195 broken, right? So you're going to ask, so why do I find it intriguing or interesting? Well, I like high probability trades, but I like trades that are going to net me profits more than loss, right? And I'll be willing to take a loss here. Right? And obviously every investor, every trader is different, and he can risk only a certain amount of capital, right? But I think at this point, when copper is sitting at $2.05 and we have the US dollar sitting at $95.40, and we know that the dollar is going to not break 97, okay? So I'm giving the US dollar a tops of $97, okay? We're not rate or no rate. No, I'm sorry, rate hike or no rate hike, we're not going to see that dollar go past 97, right? It's just not going to happen. So we got to look at the euro, you got to look at the dollar. So a lot of things factor into copper. You got the US dollar, you got the euro, and you got Chinese economy, right? So Chinese are one of the biggest producers in copper. Chinese economy is not doing all that great. I'm actually very bearish on China. I've been bearish on China since what, October, around September, October of 2015. Months following my analysis on China on YouTube, we saw the Chinese market give out around January, as well as the US market, before recouping their losses and heading right back up. And I believe that all that is temporary, right? So before I sit here and say, okay, well, I think that copper is a very good long here, I also got to factor in my sentiment as far as China goes. So in any event, if the Chinese economy just collapses, right, I have to ask myself, is this level going to hold? Because I know that this level will be broken if it's once the Chinese economy falters, right? I know we're going to test this line right here at 124. But the question that we have to ask ourselves, right? And this is where you can be right or wrong. There, you can never be all that sure. Can we say that the Chinese economy is going to collapse within the next 3-4 months? I don't think that's the case. I don't think that's going to happen within the next 3-4 months, right? So this is why I say that this line right here is not going to get tested, right? The only way we can see 129 get tested is if the Chinese economy collapses and the US dollar breaks 97, then we might see copper at around 150. Those are the only two type of cases, scenarios that I could see copper tracing back all the way down here. And to be honest with you, I wouldn't even mind copper testing the 125, because if the copper tests 125, I'll be all in. I would say screw trading oils, screw trading gold, screw trading the U.S. market. I'd put all my money in copper just for that sweet bounce that would occur around 125. So short-term sentiment on copper, I'm going to say I'm bullish on the short term. Long term, being that I'm bearish on the Chinese market, I'm going to have to say long term. I think that we're going to see this support line here break. So somebody had asked me a question. Well, how do I determine what support lines are? Well, it's very simple, right? Obviously, this was an all-time low. So this is obviously this is a major support. It's not even just a regular support. This is a major support, because if this support gets broken, obviously this was the drop here in 2008. If this support gets broken, we're going to see sub-dollar on copper. And I don't think politically, and there's various reasons as to why I don't think we'll see below $1 copper. But so the support line obviously is here, because after this initial big drop, we bounce back up. So this would automatically be a support. Again, this is a large time frame. And then we see here, you would have to zoom in. You see that it ran up, it retraced back, but kind of held before going right back up. So we're going to mark this as a support. And as we see here, right, in January of 2016, we saw this area here get tested, right, at around 197. From 197, okay, we bounced to $2.30, right? Now, for every dollar that copper moves, if you own a contract in the futures market, for every dollar that copper moves, you will retain $10 per dollar move on copper, right? So that move from January until March, 2 months, would have netted you 30 cents on the contract, which would have been around $3,000 on the contract, right? And it might not sound a lot, especially if you're day trading or you're looking to get $1,000 a day. Sometimes you just have to be realistic, especially if you're a new trader, right? Your goal setting as far as profitable targets should not be all that high. So this was no work. This was no work needed type of trade, and that's what I'm looking for here, right? Because the market is very volatile. So as a future market, you have a lot of economic reports and factors playing a key role in the volatility as we see today, and a lot of it is going to happen around June. So to go back to the theory here, we tested a 7-year low, right, which was around 2009, and we held. We bounced 230, and then we double topped at around 230, right? It's a double top. Once we double topped, we had a nasty turn because it was obvious that we couldn't break 230, so we had a nasty downturn. We had a slide, and we went all the way back down to around $2.05, and that's the low that we're sitting at today. I would pay high. I would pay very close attention to copper, right? Am I saying that it is a perfect time to buy in now at $2.05? I would wait for around 204. I would want my average to be around 204. 205 isn't all that bad if you have a long-term perspective on this trade and you're looking to swing for a month or two. But we're starting a channel. So this is the start of a channel here. And we're nearing the bottom of the channel, especially we're nearing close to the 7-year low again, right? Now let's look at the 30-minute time frame. 30-minute time frame, this is the channel that I'm speaking about, right? So every time we hit this level, we tend to bounce back up to around 208. And then we bounce back to the bottom around 204. And then we go back to 208. Now we're at 204. So my opinion here is that we had that double top right here at around 208. So I'm not saying to everybody jump in, this is gonna go to the moon. No, I'm not saying that. I'm saying that this should be on your watch list, right? Because given that if we bounce back, hold this $2.04 support, we're not going to triple top. I don't see a triple top because if we tend to drive back up and go to the upside, we are not going to triple top. We're going to break it, and we're going to shoot for $2.10. Now, I don't know when that is going to be, but again, because like I said, June, we have, the market is pricing in a rate hike. I mean, at this point, I believe the commodities at this point, being that the dollar surged from 89 cents, 90 cents to 95 cents, I think what the market is doing is just pricing in a rate hike, similar to what it did in December, right? So when everybody was shorting gold in December and buying the US dollar, I was trying to tell everybody that the market already priced it in. The market prices in stuff before it happens. And when the news happens, it sells off. That's why you'll hear in the market, buy the rumors, sell the news, right? The market, I truly believe, has already weighed down on the commodities, and everything is already priced in for June, right? And I'm not talking about oil. I'm talking about the currency, and I'm talking about the rate hike, right? So when the dollar goes up, commodities go down. When the dollar goes down, commodities go up, right? Why? Because it's cheaper to buy the commodity when the dollar is down. So what my game plan for copper is going to be this. I would want to average around $2.47. I would like my average to be at around $2.04.07. And I'm going to swing it for 4 cents for first target at $2.08. Once we hit $2.08, I am going to pay very close attention to the dollar. If the dollar continues to show weak strength, right, weakness, I am going to hold my position for a play to $2.10. Right? So these are the levels that we're looking at here. And this trade, this potential future trade, is gonna need patience, right? So this is a resistance area too, because this is a top. If we break this resistance area, I am not going to mark 212 as a resistance area. I am going to mark $2.13 as resistance. Coming down from $2.40 to $2.05, we have not seen a technical bounce yet. And that's exactly what I'm looking for, is a technical bounce, right? First price target is going to be $2.08, 10 cents, and 13 cents. Okay. Everybody trades with a different size account. One contract is good enough, especially if you're just swinging it and you're not putting much effort into it and you're just letting it ride out for a month or two. I think that's a pretty good trade in comparison to other commodities. A lot of people like to trade oil. Oil is very volatile right now. Last time I looked at it, it was at $47.61. 5 minutes later, it's at $48. So if you're looking for a less volatile commodity in relation to natural gas and oil, copper is something to look at. It's playing a good channel. It's at a very good price, a very interesting and lucrative price as far as the swing setup. We look at the 15-minute chart here. You'll see the channel right here. You'll see that it's holding, right? It's holding. I've been paying attention to the CFTC report. Money managers are still short copper, but we're seeing a reduction in short, and we're seeing an inflow in net longs. And you have to pay attention to the CFTC report, because sometimes you won't see it all in one report, but you have to look at it, week after week after week. And once you start to see a shift over in money management longs and shorts, you can pretty much guess where they're gonna turn this up, because at the end of the day, it's the money managers that really control the commodity prices, the hedge funds. That's really who controls the commodity prices as far as future contracts go. And obviously there's other fundamental aspects of copper that's weighing down on the prices. So long story short, this was just quick to show you guys, because usually I'll post just pictures on my Instagram, and I feel like a lot of people, even though the plays come correct, entries are always good. Sometimes I feel like the viewers don't really understand why I take long positions or short positions, and this is exactly what my setup is. I'm a support resistant trader, right? I will either short or go long on resistance, and go long or short on support, depending on what my sentiment is at that time. If copper was at 207 cents, I wouldn't even bother looking at it. I would only have it on my watch list, right? Because that's a neutral zone. But when you start nearing down support or resistance, that's when I'll come in, because that's a sure play. That's almost a sure play, right? And even if it's not a sure play, my loss is going to be very minimal, right? Only hundreds of dollars, in comparison to if you take a position here at 207, your losses would be around thousands of dollars, because this is a neutral area. It's a neutral zone. It's not. There's nothing sure about it, because at 207 or 206, it can either go back down to 204, or it can either go back to 208. But if you take a position at 208, that's going to be your resistance, and if it breaks 208, it's going to be the next step is going to be around $2.10, right? So that's how I look at it, and that's the type of style that that I use in my trades. That's the type of style that I use in my orange juice trade, my live cattle, my coffee trade, and I use it in my oil trade. So if you look at the daily chart is still on a downtrend, but since January, we've been uptrending. The daily chart is really what caught my attention, right? Because we see here $2 is support that's the main support right now. Besides the dollar, $1.93, the $2 area. So if we take a long position at 204, we can have our stop set at $2 and $2.04. I'm sorry, we can have our stop at $2. We're risking 4 cents on the daily chart. We're double topped, right? But if we can hold this support right here at around 204, why wouldn't you take it? Why wouldn't I take it? That's my whole point, and that's why I said that for me, short-term sentiment is very bullish on copper. Obviously, there's some bias into that because I am short the US dollar, and I am long gold. Obviously, gold goes up, copper is going to go up, the metal is going to go up. So, again, we have a double top, and we have a double, and we're sitting at the double bottom. So right now, copper is going to have to make a move, and the copper, I believe, within the next week or two, you know, we're going to make a move. We are going to make a move regardless because we're going into June. Rate hike expectations rate has been raised to, I think, 36%. I think that we'll see a rate hike in June, July, possibly. I know that we will have at least one rate hike in 2016. It would be very dangerous if they don't. That's just my opinion. Takes a longer time for me to explain why. So again, daily chart, double top, and we're going for a double bottom. Buy the double bottom, sell in between, or wait until we retest for a triple top. And at this point here, my whole point is if you take a long here, you are well off and a lot better than the people that bought around the $2.17 or $2.10. You're buying at the low. So this is exactly what I'll write down here. Give me one moment. All right, thank you guys. So pretty much this is what I posted on Saturday and Sunday.